We are so back. Right now, Bitcoin is on its way to the support 81 or so thousand. Trading volumes and total market cap is exploding. The fear and greed index is slightly less fearful. Institutional buying has recommenced and we're in a bull market. Or are we? It doesn't seem like anyone can decide definitively whether we're in a bull market or a bear market. My question would be, does it matter? If you're in crypto, chances are you're looking at a long-term investment. Yes, we all want to make some quick bucks, but if you're stacking sats, that's for the long term. So what we're going to do is we're going to talk about your strategy for your portfolio, whether the market's bullish or bearish, and then we're going to give you some tactics that are totally market agnostic and will create value for you, whatever the charts are saying. First, if this is indeed a bull market, which it might be, we're going to have to gear our portfolio around narratives and growth engines. So what I mean by that really is you've heard about AI, you've heard about DeepIn, you've heard about RWAs. These things are not going away, and they might be the key to unlocking trillions of dollars worth of value in the traditional financial systems as those dollars come on chain. So when we look at weighting a bull market portfolio, we want to have about 50% in our blue chips. That's our Bitcoin, our Ethereum, and I'm going to go ahead and count Solana in this because I believe Solana's proven itself to be a blue chip crypto. You can argue with me if you want, but that's fine. That's just what I believe. So you're going to weigh 50% towards blue chips, and then you're going to look sort of 30% into narratives and 20% into growth engines. So narratives, you want AI or AI agents, you want DeepIn. These are going to be big. I'm not suggesting you go off and look at metaverse or NFTs or one of the crypto narratives of yesteryear. If you want to grow, we're going to look at these narratives, okay? Now, when I say growth engines, what do I mean by that? What I mean is the infrastructure plays, the things that make crypto better. So that could be data-based projects or oracles such as Chainlink or Pyth, or it could be new layer ones and layer twos. So think about Monad that has recently been growing. Think about Mega ETH on Ethereum that could be the real-time blockchain, right? So if we're feeling bullish and that number go up, these are the things we want to ape into. It's very simple. You align yourself with growth to maximize gains. Now, if the market is bearish, what we need to do is flee to safety, and we flee to quality. And what that means is the weighting is geared much more. We're talking 70, 80% into the safe haven assets. Now that includes Bitcoin and to an extent Ethereum, but also tokenized gold and silver and stablecoins. You want the vast majority of your bear market portfolio to be in these safe, relatively stable assets, the assets that are unlikely to go to zero. We do that, and then you're saying, Alex, okay, I'm 70 or 80% in safety. What about the other 20%? Now, what you want to do here is you want to position yourself into value accruing cryptos that have buyback and burn mechanisms, cryptos that have a shrinking total supply and ideally are going to pay you not through the price appreciation of the token, but through the amount of tokens that you hold. So a good example here would be one of Mo's favorite coins, Hyperliquid's Hype token. You want the sort of coins that are going to pay you for your loyalty and to stick around in tokens rather than in price appreciation. And what you can also do is you can look at DeFi yield farming in some of these tokens. You can provide liquidity to some of these riskier ones if you've done your research and believe that they're going to pay back, because it might be heavily incentivized. We know a lot of projects are paying to keep their user base. So these are the projects you've got to find. Market agnostic strategies that are going to work whatever the weather, even at peak prices or at the absolute bottom support level. The first one, airdrops. Airdrops are consistently launching and they're consistently running, and yes, sometimes they're consistently disappointing. But the fact is, clicking testnets and farming activity on new projects is fun. It teaches you stuff. It helps you engage with the ecosystem, and it typically prints free money, right? Maybe it's not loads, but it's a low effort, low risk, potentially high reward strategy. Keep going to CryptoManiaks and looking at our airdrop guides and make sure you are farming airdrops. Another market agnostic thing to do that is a good idea is just to hold some stablecoins. These are useful for dip buying, but also we know that there are a lot of yield bearing stablecoins now. Think Athena's USDE, but also some of the newer ones on Solana. We can hold these coins and they will also pay us simply for sidelining ourselves and hanging out with a bag of stables. You can also, of course, provide liquidity to 2 stablecoins, right? Which should be super safe and provide a slightly higher yield. Whatever's happening, we're going to be generating profit. Now, the final market agnostic thing to do is if we zoom out and we look at the clear up to the right trend of all major great projects, we know that a lot of them run on the proof of stake consensus mechanism. And Ethereum and Solana have now got liquid staking and restaking. So think EtherFi, new projects like Hilo on Solana. If you believe Solana and Ethereum are going to go wild in 5 years, 10 years, you might as well stake, liquid stake or restake some of these coins so that you're accruing value again, whether the price action is heading north or south. So really, the question isn't whether it's bull or bear market, it's what are you doing to position yourself for wins? And we've just given you a very clear portfolio structure for bull, for bear, and things you should be doing market agnostic. That's really important because we often think, oh my God, I'm just going to wait and see what happens. Don't do that. These are things you can do right now. You can, of course, also do both. You can have a bull market portfolio and a bear market portfolio and just run them at the same time, split 50-50. It's up to you what you do. We're just giving you options and saying what we think's best based on us having been around the block just a little bit. So is it a bull market? Is it a bear market? Does it matter? Let me know. Leave us a comment, drop us a like, please subscribe. You may know that we recently lost our Instagram channel, so it's really important that you come and subscribe to us here on YouTube and also sign up to get our emails so that we can stay in touch with you. Thank you very much and see you next time.